been waiting for all night, Jonathan Bowden.
Sure. Right, thanks very much. I'd like to thank, first of all, the party here in North Wales for inviting me up from the south of England to speak tonight. Like the character in Beowulf, I've always wanted to speak with a dragon in close proximity. So here we are in North Wales. I think this is my second visit to North Wales. Now, what's been happening in the last couple of weeks, globally and nationally, is truly extraordinary. I never thought that I would see the basis of our entire economy, not like the depressions in the 1980s and 90s, but similar to the Great Depression in 29-30. I never thought I would really see it in my own life, that international bankers and their political backers and appointees would be scrambling around the earth looking for money, given the fact that many of the debts underneath Western economies are now so toxic that whole parts of our economy are in collapse. This is truly extraordinary. When Bush put $750 billion into save the American banking system, he was doing so in the knowledge that they don't really know where these toxic assets are. It's almost an apocalyptic scenario, which sort of people who wrote sort of books along these lines, they were regarded as fiction in the 1970s. What's basically happened is that the unregulated markets of the 1980s and 90s have completely got out of control all around the world. It's interesting to notice that many of our police authorities here in Wales and throughout the rest of the country have money invested in Icelandic banks, money invested in South Korean banks, money invested in American banks, money invested in Israeli banks. They have money dispersed all over the world because they think they can make a margin on it, or a margin on the margin of the margin of it. See, what's happened is that money has ceased to have any physical relationship with anything that's real, like this table in front of me with this Welsh flag on it. 100 years ago, bar of gold related to a conceptual unit of exchange, money. There was something physical it could be tied to, a term of value and a reference point, so that something that was theoretical had a physical counterpart. In the post-World War, that's increasingly been done away with, and we now have a situation where money sort of breeds on itself exponentially. Many of these instruments which are causing these banks to collapse are because tens of thousands, hundreds of thousands of mortgages were sold to people who many of the people knew when they sold them to them in the United States and here that they would default with the first sign of a depression, but they would be long out of those firms and they'd have made a good dividend for them and existing shareholders at that time. So you had an extreme short-termism in international capitalism, and the interesting thing is that they didn't really mind that the thing would be ruined later. So you have new ideas about debt. If you were in the city in the 1990s, I knew some people in the cities in the 1990s, their average salary, some of them at Goldman Sachs and Merrill Lynch, was $410,000 a year. $410,000 a year. And yet when Merrill Lynch collapsed the first time, people went from that to $4,000 a year. And no pension. Because that's how radical it is. It swings about these chaotic sort of great spasms as money moves around the world. And the reason that was touched on by an earlier speaker from Liverpool as to why mass immigration has happened in our own society is because capital and labour, if you have an international economy, move around the world. Labour is immigration. And mass movements of peoples in and out of territories are because money moves around the world. A trader in the City of London can send money to Japan, can send £10 million, 9 million euro to Japan just by putting his thumb on a screen, and the money moves to the Japanese exchange. Now, we've got a situation where the continuous decline of the stock market will impact upon ordinary people in the street. This is not something that's going on in the media. It's not a Hollywood movie that's put on for their own minor entertainment. It's quite real. Most people's pensions are down about a fifth now because of what has occurred. When Lehman Brothers collapsed, men on their exchange dealing floor were reduced from £310,000 a year to £3,000 a year. That's what they left with. They collected their belongings in a shoebox and they lost their pension in one go. In one go. That's how radical this type of capitalism is when it fails and when it goes down. And it's gone down because, in a sense, they didn't listen to reason about what they were doing in the 1990s. If you said that debt was something you couldn't sell and wasn't a commodity that you couldn't repackage, you were regarded as a reactionary, as a no-mark, who was somebody who's loyal to the economics of the past, somebody who was pre-Keynes, somebody who didn't know what a happening market was about. They packaged up debt, related it to certain assets, traded it with each other, based it upon the valuation of properties, the nature of which they didn't know that the people who bought them could repay those mortgages in order to clear those assets and build up total equity in them. It's the equivalent of a nut under 3 cups, and you move the cups about, and eventually there isn't a nut under one of the cups. There's a very famous European painting by somebody called Hieronymus Bosch of a medieval sort of mountebank, basically, and the crowd's looking there, they're looking at the cups, they're looking for which one's got the nut underneath it, they're bemused, they're gawping, they're slightly silly and inane. He's got a charmed yet supercilious and yet sly look upon his face. It's one of those eternal images. And that, in a sense, is what's been going on recently. Any fool could have told you that if you think debt, before it's repaid, is an asset that you can lever out more debt on in order to run away with a little stipend in relation to it, that eventually it will collapse. And the interesting thing is that so many of these institutions bought into the Gordon Brown notion that there would never be a downturn again. For 10 years, Brown was telling us in the House of Commons and elsewhere that he'd abolished boom and bust. When business is a cycle, it goes up and it goes down, like a human life. And the truth is that there will always be, if not a bust, then a downturn. And this is a downturn so radical, it has shocked the international elite. The thing that surprised me in the last couple of weeks is this extraordinary reversal of position that's been going on. To save the American banks, Bush is advocating things which are to the left wing of the left of the Democratic Party, and yet he has fought against these things all his life. They are nationalising these banks. They have a reluctance to use the word, but they are nationalising them on the model of the Swedish and some of the Nordic economies who had trouble on a smaller scale like this in the early 90s. That's their precedent. Brown's never had an original idea in his life. His idea for this bailout, which Cameron is copying, and he has no answer to any of these things, incidentally, which is why his poll ratings are slipping now, not just because of Osborne's antics on yachts in Corfu, but also because in a sense he's been rendered redundant. Brown, who 2 months ago looked defeated, looked worried, looked lugubrious, looked sad, looked broken, he's now energised, almost like a leech that feeds on a wound. He's feeding on this crisis because he thinks he can make himself look important by attempting to solve it. But what they're doing by attempting to solve it is nationalising the toxic assets. These are the acute debts in these banks. And if they hadn't done this, the international system would have collapsed about 2 weeks ago. Would have collapsed about 2 weeks ago. It's not conspiratorial ravings on the margins of the internet. Strauss-Kahn, who's the leading economist at the IMF, said the world economy came within 5 to 6 days of total fiscal banking collapse. This is collapsing country after country after country. Central banks having to intervene to prop banks up. If those banks had gone down, you could have had an unemployment rate in the societies where there had been such chaos created of 25%. 30% in one go, in one big bang. When the American insurance group AIG failed, they had debts of $1 trillion. It went down straight away, just like that. They'd insured most of these assets with the American banks. When Lehman's went down, they had $650 billion worth of debt. They pumped in $750 billion on top of that. That's essentially $2 trillion. America gets this money because it's the world reserve economy. Everyone else invests in the dollar because it's the unofficial currency of the world, as the pound sterling used to be when we were the imperial power. The history of the 20th century is America essentially took our empire from us because we exhausted ourselves in 2 world wars. And they've essentially replaced us as the hegemonic power. They now look worryingly at India and at China, who are coming up. Now this may all seem a long way from North Wales, but the truth is our elite ceased to be British a long time ago and thinks of itself as part of an international group and an international salariat, partly based in London, lower tiers in Cardiff, lower tiers in Edinburgh, higher tiers in Brussels, higher tiers in New York. They see themselves and they see these jobs as interchangeable. When Brown is in trouble, Mandelson, who loathes him, personally, as much as any two mainstream politicians have ever done.